Hello, and welcome to another Monday of lessons from the best of biotech stocks. What clues could these companies have given us? Could we have gotten in before the price explosion? This is not technical analysis, only fundamentals. How did someone become a millionaire from PRAXIS Medicine's move? Was it a scientist? Let's talk about in today's video. Welcome to Taxi Biotech, a show to keep up with the latest news and updates from the world of biotechnology and to learn about its impact on the stock market. The stock data present here is just a reflection of how companies or the clinical trials are progressing and does not constitute any investment recommendation. This is purely for entertainment. Okay, let's go. We're starting with Praxis, which skyrocketed more than 250% after presenting positive results from two phase 3 trials for essential tremor. Pay attention because we are going to learn a lot from Praxis. In their Thursday press release, they reported that the improvement compared to patients who received the placebo was significant, with a very strong p-value. The data were truly good, and they mentioned that they plan to meet with the FDA to seek approval for the drug. What really caught my attention was that they said patients in their trial had been living with tremors for over 30 years, so there is clearly no effective cure and high demand. In the end, almost 50 patients were enrolled, and the improvements were statistically significant. Although nearly 30% of participants drop out due to drug-related reasons. For a disease with no cure, that might still be acceptable. Taking advantage of those good results, they did a 500 million stock offering. Before the huge revaluation, that would have meant around 30% shareholder dilution. However, thanks to the new stock price, it only represents only about 12%. And they issue new shares at the new market price. That's why the stock continued to rise the next day. So, here come the lessons. First, in the August earning presentation, here in August, they already have enough cash to operate until 2028. This is a metric that I look a lot, okay? However, they have this money to run into 2028. They still went for a stock offering. So a stock offering in biotech could come at every moment. Second, they mention here that they would present data from this study by the end of the year, and that if there was enough evidence, they would seek drug approval. Honestly, that statement here, marked with this color, gave me the impression that they weren't entirely confident in the trial. And when I reviewed data from the previous phases of this study, I understood why. Look, in May 2022, they presented the first data for this drug, calling them positive. But in reality, you can't conclude much for only 11 patients. Still, the stock jumped here 75%. And guess what? The price stayed exactly where is it now. So, our second lesson, if a stock previously skyrocketed due to good preliminary results but later fall, then when new positive results appear, the price tends to recover those previous levels. Do you understand? However, a stock drop is never a good thing. Why did Praxis experience such declines? Well, after giving us good data for their tremor drug, in June they reported negative results for another unrelated trial, and the stock fell 81%. From 76% increase to a 81% decrease. in just few weeks. This is biotech, my friends. Later, in March 2023, here, they presented new data for the tremor drug. This time with many more patients. We're going to review it, okay? They presented data from 116 patients. The results were positive again, but not entirely. Let me explain. Many diseases are measured using a scoring system that rate. Let me go to the. Okay, here in the slide. So as I said, the results were positive, but not entirely. So many diseases are measured using a scoring system that rate how well a patient can perform daily tasks. In this case, the scale for essential tremor includes things like speaking or eating with a spoon. Praxis noticed that item number 12, social impact, could modify the statistical outcome. So they decide to modify the scale, removing social impact and adding 2 new factors related to writing and other movements. That's why the current version is called the modified scale, marked with an M, okay? When a company does something like this, it's generally not seen in a good light, especially because the average investor, even if they understand clinical trials like we do, usually doesn't have deep knowledge of the specific rating scales used for each disease. Hey, maybe what Praxis proposed here actually makes sense, but at a first glance, it defines something that doesn't inspire confidence. Although the data were positive, the difference between including that social impact and excluding it were different. Going to the slide here. So, including social impact here were not statistically significant, and here excluding social impact was significant. So the data were positive only when excluding social impact. It's true that when the disease is more severe, here in this slide, the drug is stronger because in every population the statistical was significant in both cases, with social impact and excluding social impact. Still, as I said, investors didn't take it well and the stock fell 70%. But that wasn't the end of the story for Praxis, because earlier this year the stock fell another 52%. Why? Because an independent data monitoring committee recommended on February that Praxis should stop the trial because there were assumptions in the statistical model that would prevent them from meeting the endpoints. They advised Praxis to explore alternative analytical methods. Even so, Praxis said it would continue the study, given that it was already in advanced phase. You can imagine how that news was received, with another 52% drop. Honestly, I wouldn't buy this stock a week ago. You have a company that presented good results with only 11 patients, okay. Then they had to modify the patient and rating scale. And then the independent monitoring committee recommended stop the trial. I mean, how much clearer can the red flags get? And suddenly the same trial comes out positive and the stock did a 3x. Incredible! Biotechnology, my friends. So here comes the third and most important lesson. There was one guy who actually got rich from this opportunity. How did he do it? Look, this user on X explained it. Earlier this month, someone bought options in this company, a huge amount. He spent $200,000 for the right to buy shares in the future if the stock went up. He paid $515 per contract of 100 shares. And now each contract is worth $11,000, a trade worth over $5 million. These lessons show us the kind of opportunity that can exist in deeply beaten down companies if there is an even a small chance of a positive outcome. Obviously, this guy must have known something about the trial. We will not have that kind of information, nor should we take such massive risk. Remember, if the trial had gone wrong, he would have lost $200,000. Who could have done this? It must have been a scientist with access to the data. Someone who also really understands finance and knew exactly how the market would react. Finally, a scientist winning? Incredible? We don't need a Ferrari here. A Toyota Corolla would be enough for us. For us, just getting with a couple of contracts like this would do the trick. But trading options is very risky. I would only do it if I am covered, not naked. If you would like a video about how options work in biotech companies, let me know in the comments. If there is enough interest, I make it. And a quick reminder, I'm posting daily videos in shorts summarizing biotech companies' press releases. The goal is to spot exactly the kind of clues we've been analyzing in this video series. Check them out and give me your feedback, please. Okay, we leave behind PRAXIS, big lessons, and move to RANI Therapeutics, which increased as much as 400% during the session last Friday. Why? Because they announced a collaboration deal worth of $1 billion with a Japanese company, plus an additional $60 million in funding. For a company that had a market cap of only $36 million, that's huge. They were basically doubling their capitalization instantly, with the potential to reach $1 billion. Hence the massive move. But wait, let's break down the press release because it's not quite what it seems. The deal states that RANI will receive $10 million upfront and up to $75 million if certain milestones are achieved. RANI's technology allows antibody delivery through pills, eliminating the need for injection. So if the Japanese company's molecule works with the RANI platform, they'll continue releasing milestone payments. Additionally, the Japanese company reserved the right to try this with 5 more molecules, which could theoretically bring the total potential deal value over $1 billion. So right now, what's real is a $10 million upfront payment plus $60 million in financing. Not a bad deal for a company worth just $30 million market cap. That's more than double their market cap. So it's definitively a good deal. In fact, it's spectacular for RANI, but there is still a long way to go before reaching that $1 billion potential. As always, let's jump into our time machine to see whether we could have anticipated this contract. Back in August, they had already mentioned a collaboration with this Japanese company, and the analysis confirmed that RANI pill was able to deliver the payload as effectively as an injection. So, here comes today's 4 lessons. If there is a collaboration where the company providing the technology confirms that the technology works, it's reasonable to expect that this could lead to a broader agreement in the future. Considering we are talking about a company of only 30 million market cap, and that these kind of deals usually include an upfront payment, we might have been able to anticipate something. Of course, no one could have predicted a deal of that scale, with that level of private financing and such a huge stock price explosion, but the idea here is to identify patterns, situations that could repeat in the future. And finally, let's move to ARTIVA, a company working on allogenic natural killer cell therapies that combine two classic already approved monoclonal antibodies for different diseases and enhance their effects, in this case related to rheumatoid arthritis. Back in August, they told us that the first patient had been dosed and that they expected to share safety data in the end of this year and efficacy data in 2026. However, on Thursday, they announced that the FDA had granted them Fast Track Designation. They also said that they expect favorable safety and tolerability data, but didn't provide any concrete results. That day, the stock skyrocketed over 100%, based on the idea that if the FDA grants such an advantage, it must mean the agency knows something we don't. However, that's not really the case. This fast track request can be submitted without any clinical data, and the FDA evaluates eligibility based on factors like viability of alternative treatments, the severity of the disease, and the number of patients affected, etc. Could be more information behind, but we don't know yet. This is a positive sign for the trial, okay, a form of institutional support. But on this channel, we've already seen cases of drugs with this designation that end up being complete disasters. So I have to agree with this user on X, who point out that ARTIVA's trial is still in very early stages, with a long road ahead before they reach a pivotal trial, large-scale clinical study. So that's it for today, my friends. Here's today's takeaways. There can be capital stock offerings at any time, so stay alert. It's worth using dollar cost averaging to enter in small biotech companies that are aiming for a collaboration deals, since those often include an upfront payment. The stock price usually rebounds to previous highs when there is positive news about the same drug. And options can be good opportunities if the stock is heavily beaten down and we expect strong results. But this is very dangerous, remember that. I hope that you enjoyed this video and let's make sure you applied what we're learning. See you next time, bye.